US is 1/3 of our sales. We have more than 2,000 employees and also a pretty good footprint with more than 20 different sites presence. We have extraordinary relationship with our customers, and we are in a good position to continue to capitalize on the growth momentum from a demand and also from a supply point of view. So we are very resilient from a exposure tariffs point of view. But maybe the aspect that I would like to make, it's not only how much higher the goods are going to be from whatever company that has to export into US, leading into high inflation. There's also other drivers behind it. Tariffs create uncertainty. And when you're uncertain, you pause. Mm-hmm. You pause investments. You pause launches. You pause scaling up. You pause. And this pausing, nobody's immune.
Yeah.
And that's what we're watching very closely. Are we seeing changes on the consumer demand? Are we changes on the consumer patterns?
You did cite tariffs as a key business risk looking into 2025 when you were outlining your annual report. And this centered around, yes, the kind of concerns about supply chains, but also long-term investment. Now, I know Novonesis has been investing heavily in the US in 2024. How much was this a preemptive move in anticipation of these kind of tariffs?
We're not that smart. The driver why we invest in US, it's a big market for us. We see growth. We see extraordinary relationship with our customers, and that's across all areas. It is in dairy where we make one investment, also to support global, but for sure local demand. It is in protein and novel fruits, and also we see very high level of traction on household care with new enzymes that replace microplastics and enable better detergents. We see big growth, continue to be growing in bioenergy. Actually, E15 has never been as close as it is now. But even without E15, strong penetration of our solutions, enabling higher yield and higher value for our customers. So across the whole country, we see growing demand, and that's the main driver of the investments we have put in behind. Now, yes, that gives us also resilience and less level of exposure in a wall of higher tariff if that would ever come.
And if they were to come, what would be the strategy? I know around half of your production, your plants are based in Denmark. So do you foresee a big risk there in terms of what you might need to import into the US? And for those production houses that are situated in the US, will there be an impact from at least the import of raw materials?
So we have a beautiful global footprint, extremely resilient, and what we call multi-purpose assets that we can flex and capture swings on demand. That we have present in more than 20 different sites in US, and we are very well positioned to continue to supply the local demand. For us, what it's more important, it is not only the impact on tariffs that would exist, it's also the impact it makes on the market. Mm-hmm. When you bring tariffs, it drives uncertainty. And when you're uncertain, you pause. Mm-hmm. You pause innovation, you pause launches, you pause investments. Maybe consumers also pause or change the way that they consume.